And outside of Farfetch and Livongo, can you share some of your biggest winners and also biggest losers of 2020? I know we want to talk about Fastly as well, that big gap down. But yeah, could you share some of those stocks?
Sure. So I'll just show you. I have Livongo set up here. I just as an example of how I buy stocks. So I thought I'd just bring this up. And then I'll go into some other names. So Livongo was my biggest winner of the year, both dollar and percentage wise. So you can see this is the double bottom that I saw shaping up on the daily. And just in terms of the relative strength setup, like I spoke about, if you look at Livongo versus the market, I mean, the market was way lower here, and we were already kind of breaking out above the midpoint of March. So this was much stronger than what the market was doing. It was a real powerhouse. And so I'm really happy. I'm just proud for my own purposes. I bought at the right point and I sold literally at 144. That was my trade. So I'm proud of that. But Livongo is my big picture idea. One of the frustrating things about Livongo, and it was driving me crazy all year, is my broker would not extend any margin on Livongo. So it was my biggest position and I couldn't get margin on it. And I wanted to buy more, and I probably would have had a much better year if I could have, but it was anyways, that's just the way it worked out. So this is kind of the way I look at things. So this is, again, that kicker candle pattern I was talking to you about, the expectation breaker. So we were in our double bottom. So the relative strength was there. We were above our 50 and 50 day. And we had the follow through and we kicked higher. So this is kind of like everything coming together here. And so I started my first buy on the open. So you can see on the, I mean, if people want to look at this later, they can. I kind of put the percentages that I bought just to get a sense of how I do stuff. So my first buy was a 28.18, which was a 21% of a full position. I added at 29.26 and a strong close. So at the end of the first day, I had a 26% position. So whatever amount of money you want to put in a stock, I had 26% of that on the first day at an average of 28.37. So I was up on it right away. So at 0.2 on the next day, we had some follow through. So I gap up follow through from the base. I added a little bit more. So I had a 30.48. By the time when I made the second buy, I had a 7.5% cushion. And after the buy, I had a 35% position with a 5.5% cushion. So I always want to be cognizant of how big of a cushion I have, because there's going to be volatility. So if you have, a 0% cushion in a big position, you're going to get knocked out. Mm-hmm. And so you can see here, so, this was a really strong stock, and I kind of built it up, and these are all the different buy points I made. The only sale I had was up here at 0.5. I sold very small and I bought it back quickly. And I sold it just because I was kind of going parabolic, but I didn't want to, but I wasn't sure of the market at that point. And the way it solidified the next day showed me how strong it was. So I finished up my position here. And, I wanted to add more to it afterwards, but again, because of no margin reasons, I didn't. And this is how I established my position. All this was sold at 144 in July, or I think it was July. And so anyway, people can go through the chart after and look at all the little notes that I made. But this is how I did it, just to get a sense. And, I like to go back at my big winners too at the end of the year and not only look at where I bought and sold, but really look at how, where did I buy? What kind of exposure did I put out? What was my cushion on my buy? Because I noticed some of my losing streaks came when I was buying too much too quickly. And then I was stopped out by regular, market moves that are just normal. And you're stopped out because my dollar stop is being hit. So that's kind of how I like to do my post analysis. Yeah.
Very cool. And what was if you go back just 1 second, sorry,
sure,
I have one question.
Absolutely.
After that last buy at 8, what was your mentality when it moved up and then round tripped right back to that last buy point?
So you can see here, so at 0.8, I bought only like 11% of a full position. So my last little piece, I bought it on a 24% cushion. And now I had a full position with a 21% cushion on my new average cost. So at 0.8, when this went up and came, I was fully expecting a pullback. It was guaranteed. But at this point, I already knew this was just, the end of April. And Livongo was by far the winner of the marketplace. Everyone was getting that. All the news was coming out that, the remote patient monitoring was being used for people with pre-existing conditions. And those people are most at risk for, coronavirus. So, I think everything was there. To me, it was clear this was the winner. This was my stock where I wanted my biggest position. I probably would have had double the position if it was marginable, but I had to hold myself back. So when this came in, I wasn't worried at all. If I would have had more buying power, I would have bought more of this stock. So, but what really helped was the cushion. So, I had this cushion. At 0.8, my cost was $32.21. So my cost was down below the 10-week moving average.
Yep.
So before I was going to sell Livongo, I would have had to sold my other stocks first. So this was kind of my captain. So I was, very patient with the stock at that point.
So you're willing to completely sell out of your losers just to make sure you can stay in that one stock that's kind of your focal point. That's very interesting.
Yeah, to me, it's really quality over quantity. I used to want to have, more exposure, just more margin on, like, hey, it's a bull market, I have to be invested. But I'd rather be 30% cash, but be invested 70% in really good quality names than be 120% invested in just stocks that are going to stop me out, or I'm not properly positioned. I can't add to them at the right point because they're out of position. So I really want to have a solid position in the stock at a right place and let it, rock and roll. That's how I like to do it.
Very cool. And how do you deal with earnings reports? Do you go in with a full position, no sweat, or do you have to have a specific cushion to be able to sit through that?
So if I don't have a 10% cushion, I won't stay in. So the way I look at it is I figure a stock, I assume a stock's going to fall 15 to 20% if it goes against me. So if I have a position and it falls 20%, and if I have a 10% cushion, I'm going to lose 10% of the stock, which is going to be, not a good thing, but I'll survive. So that's how I want at least a 10% cushion. But that's assuming I have a regular size position. So for a stock where I've been adding beyond a full position, so I'll do that if, let's say, I've been holding the stock for a while and it's been building a second base, et cetera. If for whatever reason it's happened to me in the past where I have an overly large position, I'm going to want a bigger cushion because, now the odds of something very bad happening and that since I have a bigger part of my account in there, it'll be all the more disastrous. So the bigger the position, the bigger the cushion I demand. But I need to have some kind of a cushion going into earnings.
Very cool. And this is kind of off topic, but I just remembered I wanted to ask you this. I think it was in a Jim Ropel interview. He said there's only like 2 or 3 times per year where you really want to be putting on new positions. Do you kind of agree with that? And what are your thoughts about that statement?
I think there's 2 or 3 really good buy points a year where like the stars align, and that's when you really want to, find the winners of the next cycle. I think there's other times in the year where you can do buying. For example, in end of November, early December, I screwed it up. But if anyone was aggressive there, I'm sure had a fantastic month, But the best buy point was April, and that's when you really want to be aggressive, So I think there's some other times, but I think in general, he's right. In terms of position trading, there's that 2 or 3 times a year where, wow, that's really your time to make big money, and that's if you're position trading. Swing trading, I think you have just many, many opportunities. But like I said, you're kind of trading more for income than for life-changing money, in my opinion, my experience.